Markets are down 100 points, but we're doing better off than what it was looking like, say, an hour or so ago. Nimesh joins us to tell us what's going on. Well, Nimesh, a lot of panic. I mean, today was that sort of a day, right? In terms of it was shaking out all the weak hands. But what are you picking up? How are the flows?
Well, actually, flows. Forget the flows part, but more so, while you're seeing a small recovery, I think this week was very brutal, right? I mean, no taking away the fact the indices is around 7 to 10%, which means the portfolio are down 25-30%, and now you can see the panic with the portfolio investors. I've been talking to so many investors in the last couple of days, and they clearly feel like now it's hurting them. There is a lack of confidence now. People are panicking, and until now in the last few years, every follower is like what to buy. Now the question is
what to sell.
When can I get an exit? How can I get an exit? So that's the kind of sentiment which has changed. And that's playing up in the broader market names. I guess today being a Friday factor also that's added to the pressure in the broader market names. Yes. I understand technically a lot of investors were not allowed to buy as well, despite having margin. So this margin pressure is there. I mean, let's not take away that there is no margin pressure. There is margin pressure, and that's impacting the buying of other investors as well. So that too played out in the broader market names today. Institutional flows are still mixed. I've been saying this but for the last couple of days, if you look at the data, it's dollar to dollar matching between FIs and DIs. Looks like that kind of day today as well. But the panic is in the broader market names, and look at the advance decline ratio as well. Almost 1:6, 1:7 on the sell side. So that shows that there is clear capitulation in the broader market stocks today. Consumer as a space has been well bid today, so that's where some bit of buying is seen from the large institutions. But again, the good part about today's recovery is 28,800 on the Nifty and PCR at 0.7. That's been what is helping a bit of recovery even in today's market. But clearly there is panic now from portfolio investors.
Well, that's right. That is the combination, right? Nimesh, 0.65 on the PCR.
And
you have the FIs that are net short, and the double or triple bottom at 22,750 to 22,800, at least for now. If it breaks, it will be on your bottom.
But honestly, while we're laughing and we're talking about these levels, you ask for the sentiment across street. It's very, very bad.
Yeah.
People have just lost confidence.
Indeed.
There is no sentiment to buy or even discuss buying ideas. Forget buying. They are not even discussing
sentiment
ideas
is down.
to buy.
Absolutely.
Very, very bad.
Absolutely. What about individual stocks? What are you picking up?
So in terms of individual names, it's not everything is bad or there is massive selling across the board. So the first name is Affle India. While the stock is off days high, actually intraday the stock was up 3% as well, and there was buying as well from large institutions. So that's first name which stood out on the buy side in a weak market. The second is couple of names which is where there is aggressive delivery-based selling. IRB Infra as well as Delivery. Delivery is now part of FNO as well. Both the stocks are very aggressive selling from large institutions. So again, a bit of higher delivery on the sell side. The third name is Manappuram Finance. While the stock is in the FNO ban, the results were quite weak. But I understand there are block bids from larger institutions in Manappuram Finance, and also there is a hope of a potential deal there. So that's the reason why some bit of traction in Manappuram at lower levels. And the last is a couple of stocks in the cash market where there is buying interest. SpiceJet and Dr. Agarwal recent listing. Again, this stood out for me because kind of panic we are seeing in the broader market. To see an institutional flow in stocks like SpiceJet and Dr. Agarwal stands out, and that shows that at lower levels, some bit of nibbling is happening from domestic mutual funds and institutions. I wouldn't say this is all retail money, but from an institutional point of view, some bit of buying or nibbling is happening in broader market names and small cap stocks as well.
All right.